Stronger margins, growth of the asset portfolio, solid liquidity. My name is Cosmin Samoilă and I am Chief Financial Officer of One United Properties. In 2025, we recorded total revenues of 280 million euros in line with the prior year, but more important, we improved profitability across both business segments. Net income from residential property increased with 9% year-on-year, supported by higher margins as developments progressed toward completion, and residential net margin improved to 33.9%, up from 28.9% in 2024. Net rental income from our commercial portfolio also increased with 3%, reflecting a stabilized portfolio with close to maximum occupancy levels. Therefore, result from operating activity increased to 140 million euros and gross profit reached 101 million euros. Both amounts went up 17% year-on-year. The net profit for the year was 84 million euros, 13% above last year's net profit and 7% above budgeted amount. We are in line with our promise from One 2030 strategy announced 2 years ago to double the company size in 5 years. Our balance sheet continued to expand at accelerated pace in 2025. Total assets increased with 17% to 1.3 billion euros, driven by the growth in investment properties and continued development activity, and combined 30% increase in the last 2 years. Equity rose by 8% to 749 million euros. Customer advances increased by 38% to 98 million euros as construction completion of almost 3,000 apartments is expected this year. This combination of asset growth, equity expansion and pre-sale funding strengthens the resilience of our business model. We closed 2025 with a strong cash position of 128 million euros, highest cash position in the history of the company, up 48% year-on-year. At year-end, loan-to-value stood at 36%, reflecting the use of debt to fund the expansion of both the development pipeline and the income-generating portfolio. Despite the year-on-year increase, LTV remains within the conservative range for listed European real estate developers. It supports efficient capital allocation while preserving significant financial flexibility as our asset base continues to grow. In 2026, on the residential segment, we expect the largest volume of deliveries in the company's history, which will translate into significant revenue recognition as developments reach completion and pre-sold units are handed over. 2026 will also mark one of our most active years in terms of new sales launches. As a result, the mix between construction deliveries and early stage launches will influence revenue recognition and reported margins during the year. In the commercial segment, we expect steady linear growth in both revenue and profits. Should a divestment opportunity materialize, reported revenue and profit will show a corresponding and sustained increase.